Hi again. Hi, everyone. Good afternoon. Thank you for being here. And thank you for being here every week and for your commitment. We appreciate your presence here. And I can see we have new people joining us. Sydney, I can see Sydney. Welcome. Welcome if it's your first session. Welcome to Moracle Foundation training session, and hope you will enjoy your this session today. Actually, Mola is not going to be in today. So James is going to be our host of the session. And yes, we are on stage 6 of Moracle Accountancy Formula, filing with authorities. And if you have any questions, anything you want to ask or share, you can wait till the last 10 minutes of the session when we do the question and answer. So, and just to remind you that our sessions are being recorded and they're going to be uploaded on our YouTube channel. So please pay attention to that. And if you want to turn on your cameras, we appreciate that so we can have a more engaging session. So yes, I think I will give it to James now, and hope you will enjoy your session. Thank you.
Thank you so much, Sapide, for that intro, and of course for the support through the session. Welcome everyone to this training session here at Moracle. We really welcome, especially those who are coming for the first time to join us. Yeah. As Sapide has just introduced, my name is James Bogere, and I'm one of the the consultants here. I'm an accountant, chartered accountant, and I'm privileged to take this opportunity as when Mola is not. When I was told strictly 30 minutes ago, then I said, well, I will take the opportunity here. These sessions are for training, but the good thing they are also for learning. When we learn, it is always good to be able to participate. So we are going to go through what we call the Moracle. For those who are coming for the first time, it's Moracle Accountancy Formula. And I would like okay, before I ask Sapide to tell us, sorry, to give that formula to us. I would like to just say there is a formula of serving our customers, and so Moracle designed 6 stages of that. That when we are serving clients, we use those stages in serving the client at each stage, or in preparing for serving the client. And so as you've heard, we are looking at the last one. So I would like Sapide to actually bring it, help me with the formula.
Okay,
the accountants. Yeah, thank you. I think everyone can see this.
Yes.
Yeah, everyone it is visible. Yes. So the Moracle Accountants Formula, for us who are regulars, we hear about this every Thursday, and because repetition allows us to remember things. When we repeat things, then they become, first of all, it becomes repetitive, but later on it becomes part of us. It becomes second nature, and that's what we are trying to do. That when we are looking at the Moracle Accountancy Formula, so it has got 6 stages. I'll briefly go through the first all of them, but then zero in on the 6th stage. Every month we look at one of the stages. And this month, June, our main focus is stage number 6, which is filing with authorities. So we are going to zero into that one. So, but before we file, we have to produce what we are filing. And that one begins with the number 1, with stage number 1, which is management information system. That is, we are having the data, we capture the data, we store it, and then we post it, we analyze it, and we reconcile it, and then it is then when it is ready, then we are able to use that information, the accounting information, to be able to file whatever is needed with the authorities. Now, at this stage in 1 is very, very important, because that's where the information is coming in. And so we use software, we use Xero, we use QuickBooks, and also some other companies use a range of software. There is always a help there to capture this information and store it and prepare the reports that are needed. Now, at this stage also, when we are looking at filing with authorities, we are looking at this stage, we also produce reports that are required by a tax authority, the HMRC here in the UK. So VAT, for example, every quarter we produce, the company would be required to, if it is VAT registered. There are some companies that are not VAT registered, some charities are not. But if it's VAT registered, then it is required to collect that. And what is this VAT, value added tax? This is the tax that is added to the merchandise of different types. And therefore, when the company is buying and selling goods or services that are vatable, then you are required every quarter to produce how much you have collected in terms of what you have purchased of the VAT, and how much you have bought. And that then at the end of the quarter, it will tell you whether you are to pay the excess. If you have bought so much VAT and you have sold less, then the difference will be that which the HMRC will pay you. So, but that report is important, and that one is normally quarterly. Now, apart from that, also every month, again, it depends on most of the companies, they pay their customers. Sorry, they pay their employees every month. So every month, again, we file, and here the filing is really filing, so to say, but we have got reports when we are doing the payroll. The payroll normally is connected to the HMRC, and so every month that payroll, whatever we have paid the employees, is reported to HMRC, and then there is again PAYE. There is an amount that we have to pay to in terms of taxes, the taxes that the employees are paying, income tax, for example, and also in the UK national income tax in NICS for both the employer and the employee. So every month we have got to do that. Okay, so in order to do that well, the systems must be well in place, and we have talked about how recording is so important. Recording of the information that we are given, capturing of the information, recording it, and making sure, and reconciling it, making sure that what we are having, the numbers are making a difference. So this stage, we call it management information system, because really it is we are managing the information there. Yeah, and in the wider world, it's called bookkeeping. So when now that is done, we are able to use that information to prepare what is called management accounts. Now, this one, these are reports that help the managers of the company to manage on a daily basis. They will be looking at cash flows, looking at profitability, actually in relation to the budgets, because if we would have done in stage one, we would have looked at the budgets. So in stage two, we are preparing the management accounts, which now with added value there, and we said and value add, that one then helps the company, helps the managers to be able to know, are they really on track? Is there something they can has to be done? So again, that will depend on whether that information in number one has been recorded very well, has been captured very well. Now, then, and that's, so we have got management information system, sort of management accounts, and management accounts on a monthly basis. Here at Moracle, we are encouraged that by the 15th of every month, that management accounts are ready for the clients, and then it is given chance. It gives chance the board members or the managers to look at the account that report and see how they did the previous month, and then be able to prepare for this running month and the coming months. Yeah, so that is the management. And the management, apart from the numbers, there are also the managers also put in the KPIs. They are put in that report. And here normally we use Spotlight. We use Spotlight reporting, which is quite a comprehensive report that we do use here at Moracle. Then stage number 3 is the statutory accounts and scheduling. Then in here, at Moracle, this statutory account is that's by law. It's they are again companies, once the threshold is met, the company is supposed to prepare accounts, the statutory accounts. And here, usually at Moracle, we use scheduling. In other words, everything, whatever numbers that are in these reports that we are preparing, they've got a schedule. In other words, they've got meaning. And that's why we are saying statutory accounts and scheduling. So during this stage, again, we look at what has been input in number one. You know, we are just looking at that. The stage one is very, very important, because whatever has been put there, the input there is the one that we are going to use in order for us to prepare the statutory accounts, the balance sheet, the profit and loss, the cash flow, you know, statement. That statement that statutory statement that we have got. In other words, this is done once a year, and the company is supposed to do this because it is by law. And so there we come in as accountants with our technical know-how, and that's the reason why we need to be able to do this service with very, very care, and with the intention, and also our emotions are involved as we just this. Again, here at Moracle, we have got that we have got templates that we use to do that, and again, we make sure that in order for us to do this, stage number one has been done well. The input of the information, the reconciling of all the figures, in terms of if you look at the balance, the sheet for the trial balance, for example, all the figures that are in the trial balance are actually are reconciled in a way. And so here we just have to put in numbers to prepare that accounts properly. Stage number 4 is on taxation. So here again, as accountants, we are basically agents. So we are going to help the government to know how much tax this company is going to take. But on the other hand, also we help the company to really pay the right tax. Okay, so yeah, taxation here. We've got the corporation tax for the companies. Again, depending on the threshold, they are going to prepare a corporation tax and then file that and pay tax. But also at this stage, for as individuals, we have got also self-assessment, whereby if people are working by themselves, they are actually on their own. They are also supposed to prepare to us to prepare what we call self-assessment. In other words, within the year, to make sure that all the whatever they have done in their business is reported in such a way that the company or the individual reports to HMRC to say, this is what was going on in my business, and this is how much tax I'm supposed to pay, and that self-assessment is important for each. If it is not done in time, we are going to just be looking at that. There are penalties involved. In fact, at every stage there are penalties if we are talking about reports which are needed. Also, in terms of okay, that's stage number 4. Now, stage number 5, that is the reporting. Now here, there are companies that are supposed to be audited again, but there is a threshold. Yeah, some of the companies, depending on their turnover, they may not be audited. But here at stage number 5, when we are at stage number 5, again, we are depending on what was input in stage 1, and we are depending on the system that was used there, and reports there. The reports that are produced here are dependent on that. And of course, the auditor, when he's looking at the information, he has got to have that, what he tests. He carries out the test, the testing of the different systems that was used to prepare this information, which is being audited, and he carries out substantive substantive tests, and then to make sure that actually when they produce an auditor's report, they are ensuring that the information that is being presented in these reports is fair. There is also that expression of free and fair view. There is a free and fair, and the information has been presented correctly, and all the apart from just presented it correctly, it means the company has actually followed the rules. They will of course look at the bank. They will look at everything that is going on, all the activities that are taking place in an audit in the company. So when the audit is going on, they will try to make sure that before they produce the audit report, they have actually carried out information. They have carried out examination. They have carried out. They have audited almost every figure. Not necessarily. It depends on whether information in number 1 in stage 1 was put. The systems are trusted. They normally when they are doing this. But also there are some companies or charities whereby they will carry out independent examination, whereby this might not be a statutory audit, which is required by law, but it might be an independent examination. So it might not necessarily be that also uses the same methods, but it's not as rigorous as the statutory audit. And then the last but not least, the other report is the accountant's report. Again, as accountants, we use this one for companies that are not which do not qualify for auditing, for the statutory audit. And you are endorsing, again, as an accountant, you are endorsing that you looked at the information in that company, and you've looked at the activities and the reports that are coming out. You are satisfied, and this report normally is as this report normally is as per the accountant's report is the SCA has got, again, the structured report which you have got to follow. Now, stage number we come now to number 6. Stage number 6, which is filing with authorities. By the way, I should have said that when I'm just going through this, you are not you can ask if there is any question. You can stop me and say you have got. Although we said it will be at the end, this one is a bit more interactive. Usually, I would prefer that when I'm doing this, if there is something that you can ask really without really saying that we are going to ask the questions at the end. We can have questions at the end, but within, as I'm just presenting this, you are able to do still ask the question if you have one. I just briefly went through 1, 2, 3, 4, 5. Is there any question that arises, especially for the people who are new? Anything that you would like to ask before we go to stage number 6? Okay. Right. So stage number 6. Now, stage number 6, whatever we've talked about here, whatever we are doing at every stage is really aiming at stage number 6. I would like to use I would like to use the example. Well, I don't know whether I need to use another example, but let me just use this a brief example to explain this. For example, if students go to school, at the end, the report card that they bring back is saying something that they have done throughout that year. And so the report card, the certificates, if they get any, they actually very, very important. They explain how the student is doing. Now, for the companies, in order for the information, at this stage of the filing with authorities, the authorities they've stipulated certain reports that have got to be filed with the. We have got 3 authorities here. We've got the tax authority in the UK. It's called the HMRC. Her Majesty, the tax, the company, rather the organization that deals with taxes. Now, the Companies House. The second, again, all information. If you are registering a company, if you are registering a company, you register it with Companies House. And also Charity Commission. Again, those 3 authorities are very, very important. So depending on the company, if it is a charity, then it will register, or it will file with Companies House, also with Charity Commission. And in some cases, if the directors, of course, are involved, then there will be a requirement for HMRC to get involved. In fact, HMRC is involved, not just the directors, because any company here has got employees, and therefore there is that automatic linking the payroll with HMRC. So that is automatic for every company anyway. Yeah. So the filing, what are we filing? We are filing, as I've already mentioned, the VAT. So we are filing self-assessment. We are also filing CT 600, that is the tax, and also we are filing the the accounts. We are filing audited accounts. We are filing them. Okay, and this is actually a requirement. So if filing is not done, then what will happen? There will be some penalties. There will be penalties which are done. Already last week, Molai talked about what happens if filing is late, and he went really into the fact that as accountants we are the agents, but we are the ones again who are doing the right thing so that we prevent those emotions, that what may happen if filing is done late, and then the company directors are given, or managers are given these letters, the penalties, and where they are to the extent that they don't want to, they may even have heart attack when those letters come from HMRC, for example, if they are asking for tax which has not been paid, or or asking for documents that have not been filed. In fact, for some of the self-assessment, some people may not take it that it is important, or they may not know, and we've got situations where people have been owing HMRC a lot of money, and they are not sleeping. You know, you talk with clients have been brought to us whereby they're in that situation where another either they didn't report that they have been they didn't know, they would say they didn't know, you know, they because they are employed, but at the same time they've got an extra income which they were supposed to disclose to HMRC, and when that one comes out, then they are owing HMRC so much money. They should have done what is called self-assessment and filed it. So that is it is us as accountants to be able to be in that situation to advise them and make sure that we avoid that those nasty scenarios. Yeah. Now, in terms of for each one of them, I think we would look at last week there was more like talked about the late filing, the charge, when these documents are filed late, there is a penalty, and it actually depends on how late it is. So, and these penalties are really quite they are not good. You know, if a company is getting penalties because of the fact that we have not filed the documents right at the right time, then it is us to bear that brand, the brand of making sure that of course the fingers are pointed at you if you have not filed this at the right time. Now, if it is VAT, the same thing. If it is VAT and you've not filed the returns of the quarter, usually it's 15 days after the end of the quarter. That's when you are supposed to file that. And if it is late again, there would be penalties there. In terms of self-assessment, for example, the self-assessment for the year 2023-24, it will be required by the 31st of January 2025. There is quite a lot of time there in order for you to prepare the document, the information that is required to be filed by the 31st. And after that, if it's not filed, the individual is penalized £100, and of course, if the longer it takes to be filed, the more there is the penalty, but also they add interest. We have a situation where one of our clients came to us for self-assessment. The amounts were in tens of thousands, and the interest was in in thousands. Yeah, if I can remember very well, it's about it was over 5,000 just in interest alone, and then was owing the HMRC over 20,000, by just for self-assessment. That is just an individual, for companies it can be quite big amounts, Yeah, so we need to make sure that these due dates are we actually make sure that the due dates are observed and they are respected, because otherwise, if not, the penalty the penalties are nasty. Okay, yeah, and in terms of I just want to stop at this point. If there is any question or there is some comment of addition, I want to just stop at this point. Okay. Okay, that would mean that would mean there is no question. Okay. Yeah. Now, I've just talked about the fact that in terms of filing, depending on the document we are filing, we have the due date. For VAT, I think I'm repeating that one. Every quarter, we have got to make sure that we are filing, we are giving returns to the HMRC, okay? And that is which is by the 15th of after the quarter has ended. Then for self-assessment, we need to be able to give a return, self-assessment return, by the 31st of January, following the end of the financial year. As I said, for 2020, 23-24, the last date of filing will be 31st January 2025. Sometimes you may say, well, that's a long time, but yes, it is long, but still we get people coming, presenting the information within that month. In fact, within the last 2 weeks, or within even the last week, they would come and they are bringing all their receipts, and they are saying, I need you to do this for me. What we are saying, it becomes a problem when they are bringing that last month, that last week of January, and you need to be able to say either yes or no. But in most cases, you see they are coming pleading that they are fearing the penalty. And in terms of, with this one, in order to avoid it, if you take on the job, next time you make sure that you follow up this early enough, because when they get the penalty, they will not even blame themselves that they've come at a very late in presenting this. It will still be your fault, because they will come back and say, well, we are having these penalties. And usually, as I said, the HMRC will write letters, and they put an automatic system in place, whereby your client will be receiving these penalties. For example, there is a case where you are negotiating for them, the case where they didn't file in time. In fact, they didn't disclose, they didn't declare the incomes over so many years, and therefore you are helping them to negotiate with HMRC to look into maybe some of the expenses that they left out, and so on and so forth. As you are doing that, it may not take 1 month, it may take several months. So as you are doing that, the HMRC's letters are coming. And I tell you, anytime when it comes, then the client is sending that HMRC, says, I don't know what's going on, because when you take on the case, they see that, okay, it is actually a solution is done. Now, when you happen to get this kind of situation, just explain to the client that actually there's an automatic mailing really from HMRC once you fall in that category where you have filed late, or there is late filing, or there is no filing at all. They would actually write these letters, the letters which are showing you that there is this penalty and also interest. There is a penalty, but every day they are calculating interest, about 3% or so. There's their own interest that they work on. Small interest, but it's interest anyway. So they calculate that one on a daily basis. So as you are negotiating with the HMRC, still that information is coming to your client. So just explain to them that actually this is the system because until we resolve these letters, they will not stop coming, so that now they can actually sleep, because some of them, I mean, even if it was to be you, where the authorities are hounding you with all these letters, it is quite unlikely that you would have very good sleep. Yeah, and also in terms of the directors, again, there's that threat whereby it can the penalty can go up to thousands of pounds, once this information has not been filed. And also the fact that the company with the company's house, if it is with company's house, the company can be scrapped off, it can be deregistered, so, and with them, from day number one, immediately that information just comes out, the penalty comes, and eventually if nothing is being done, they will just scrap the company off. And can you imagine if that is, again, has been a result of you, the accountant, who is supposed to standing in, who is supposed to be working and helping this company or this director through, it has been done under your watch. That's the reason why we have to be very, very, very careful, and to have to put our mind to whatever we do. And if there are questions that we can ask, we can ask them in time, and make sure that actually we are doing the right thing. And in fact, communication is quite important with the managers and directors and owners of the companies. It's very, very important. Now, the other filings with the Charities Commission, again, that one we need to we file 12 months after the end of the accounting period, 12 months after the end of the accounting period. And again, there would be penalties there if this is not done. Now, as for the company house, we have got to file the accounts, but also we need to tell the company's house in terms of the directors, the shareholding, the directors, if there has been any changes within the year, and therefore we've got to file that information every year once. This is only done first when the company was registered. So again, if we don't do that, with that one, there is no penalty as such. But if you visited the company information in the company's house, there will be that late or overdue in red. And these public this is public information. It doesn't augur well for the company to have those overdue filing or overdue or late filing you know, when it is everything, it is in red, and people would do, the reputation of the company would be at stake there. So we have to make sure that all that is done in time. Is there any question? As I said, it is interactive, and we are learning, and we are going over, for some of us, something that we are doing, or we are doing every day, and for some of us it is the first time, and perhaps it might not be. So let's interact, please, and either there's an addition, or there is a question or a comment. Is there any? Okay, no. Yeah, okay, we've talked about the penalties, we've talked about the when we have got to file this information, and we've talked about the consequences of not filing in time. I would say I would really emphasize this, as it were. Again, I would emphasize the fact that we are doing all this, number 1, 2, 3, 4, 5, all this pointing to number 6, and the fact that these documents that we produce to be in the public, we have got to make sure that actually at every stage, those documents that we are going to file, we've read them, we've made sure that everything in that document, to the best of our ability, is correct, to the best of our ability. I'll just give you an example. Say, for example, if you are doing the statutory accounts, you are filing them. Now, the statutory accounts have got two parts to it. In terms, and here I'm talking about in terms of charity. I've got the statutory accounts themselves, but they also have the trustees report. Okay. Now, within the trustees report, there are parts where they are talking about the accounts themselves. They are talking about the reserves. They are talking. So, the accountant, you as an accountant, you are not really preparing the trustees report. However, when they give you the trustees report to incorporate it together with the part of that document that you are going to file, then you make sure that the information there is correct, because they may use in terms of, say, there is a part for, yeah, there's a part in one of that on the report where it talks about the finances. Although there is already a part for for the figures, so to say, for the finance, for the balance sheet, for the profit and loss. For in charities, it's called there is a SOFA. There is also the fund summary, and also there is that part. However, there is also in the trustees report, you need to be able to make sure that every place it is flowing well, because there might be some mistakes there. So you make sure that you do that. And secondly, where there are figures within the trustees report, you make sure that those figures are correct. So that is the reason why it's very, very important to make sure, because it's a public document. And obviously the managers are the ones responsible for this, but if they've appointed us as their advisors, as their agents, we must make sure that we are doing the right thing to make sure that things that are filed are quite correct, and they are representing the right picture of the company or the charity. Yeah. Okay. I'm going just to come to the next part. If there are some questions or there are some comments. Okay, so in summary, filing with authorities, and what are the authorities we are talking about? In summary, we are talking about the HMRC in the UK, perhaps an equivalent in your country, UNRA, perhaps. So the country, yeah, that organization that is concerned with the taxes. Now, Companies House, the again, or an equivalent where the company is registered. If you want to open a company, you want to register a company where that information is kept. And then Charity Commission, in terms of, again, if it's a charity, where the charity, if you have to open, if you have got to register a charity, again, we register it with Charity Commission. Then in terms of documents, so the documents that are required here, the VAT, the self-assessment, the CT 600, which is corporation tax, and also the accounts. Okay, so what about penalties? The penalties come in when there is late filing, or if filing has not been done at all. And these ones have got financial consequences, but also they've got the reputation of the company, to the extent that if filing has not been done, the company could be deregistered, or the directors can be penalized very huge. They get very huge fines. And so, as accountants, as advisors, as agents for these great organizations, we should be able to be advising right and be doing the right thing. I'm just going to stop there. If you don't, and allow questions. I think there may be questions. If there are questions or comments, please don't fear to comment. Not fear as such. Don't reserve your comments. There being no comment or no question, I think I'm going to end here. Thank you very much. Thank you very much for coming.
Thank you, James.
Thank you.
Thank you, James.